Forex Focus brought to you by IG, taking a look at the recent resurgence we've seen in US dollars as Forex traders the last couple of days have been moving a lot of money from the Japanese yen, Australian dollar, some of these markets that a week ago were really looking like they were turning a corner against US dollar. A lot of selling in those currencies and buying in US dollar. And we're going to talk about why. But first, show you exactly what we're talking about here. In the early part of this week, Australian dollar falling over 100 pips on not a cut from the Reserve Bank of Australia or any kind of, overtly dovish talk from the central bankers in Australia, but just an unchanged hold on interest rates in Australia. And you can see here what I'm talking about, where early part of July, the Aussie takes off for 68, 69 cents. You saw in that same time the euro and the pound get up to 112 and 130 respectively there, and not only giving back some ground to get back to unchanged for the last month or so of action, but US dollar potentially looking like it's going to resurge to the heights that it saw in the early part of this year, and potentially going back to 2022. As you can see, Aussie nearing those lows year to date at around 65 cents, trading today around 66 cents. So we'll see how far it's going, but really feeling like a US dollar story, as we've seen the same relative to yen. Here we have dollar versus yen, and from the lows on Friday to Tuesday afternoon, a rally of over 500 pips as the Bank of Japan met on Thursday night, Friday morning of last week, and came out just more dovish than expected. Again, they didn't cut rates. They didn't do anything overtly dovish, but the market was rallying the yen, selling off the dollar versus the yen. You can see those red bars going into Thursday and Friday, the end of last week, because the Bank of Japan was expected to maybe hike interest rates, their short-term rate, off of negative 10 basis points where it still is, or just do something even more hawkish. They ended up raising the ceiling for the 10-year from 50 basis points to 100 basis points, but the market not thinking that was enough, as the US dollar, again, resurging against yen. And this is where I'm getting at, where it doesn't necessarily seem like a Australian central bank or a Japanese central bank story. This is starting to look like just a US dollar rally back to the highs. Like I say, getting close to the year-to-date highs here relative to the yen. That's around 144, 145, trading earlier today around 143. And sometimes this will happen, this kind of snowballing effect of building in expectations for the Euro area, Australia, Japan, and we'll see the Bank of England meeting later this week. But for those three places, all having central bank meetings in the last week, the expectations were just higher than where they ended up going. They didn't necessarily do anything, like I say, overtly dovish that should theoretically bring their currency depreciating lower, but in the last week, the U.S. hiked 25 basis points, and I think the expectation was across the globe that these different central banks would do that and then some. And so when expectations aren't hit, you can see some of this downside. It's not necessarily, downside because of a downside expectation that is fulfilled, or even worse than they'd thought. Sometimes expectations can be high and they're not met, and you see a depreciation like you've been seeing here. And it's just kind of, I think, refreshed a lot of traders' eyes on the fact that expectations for these different places across the globe can be whatever. But until it's actually changed, the U.S. is atop the global interest rate environment for major economies at 5.5%. Now, you will keep in mind there that the UK is not too far behind at 5%, and the Bank of England is meeting Thursday morning and is expected to hike 25 basis points. If they can come through with that expectation, and the central bankers in the UK can be a little bit more hawkish. We're really looking at inflation, really looking at hiking interest rates further. Then maybe you see a rebound in the pound and some of these other currencies, and the U.S. dollar relax a little bit. But if they just do what is expected, or they don't do what's expected at the 25 basis point hike, and do what the euro area did, or the Australian central bankers did, which was be like, yeah, we're watching it, but we're not going to be that as aggressive as you might think, then you might see even more U.S. dollar upside here. It'll be really interesting to watch the Bank of England, one of the last central banks of the major powers here over the last week, to meet to see if either the trend continues of not meeting expectations globally and that leading to U.S. dollar appreciation, or the pound has been one of the most consistent competitors here, as you can see, really significant upside in 2023, going from the mid to low 120s to a couple of weeks ago above 130, and still hanging in at around 128 here. It'll be really interesting to see what the Bank of England has to say. And you can see this volatility and these changing expectations and everything leading to changes in trading sentiment, as IG traders have flipped from short the pound near those highs above 130 and 131, 132 in there, to now being long as the pound and the yen and the Australian dollar and the euro are really giving up some ground against this US dollar. A lot of things shifting here as the majority of traders gone from short to now 54% long pound versus the dollar. We'll definitely watch for the Bank of England announcement on Thursday morning, expected 25 basis points higher. But US dollar really seeing a resurgence here on not necessarily overwhelming US data, but just those global pieces not hitting expectations.